Conceptual Framework on Accounting Standards. Chapter 1. The Accountancy Profession. Part 1. A. Definition of accounting. 1. Accounting Standards Council. Accounting is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities, that is intended to be useful in making economic decisions. 2. Committee on Accounting Terminology of the American Institute of Certified Public Accountants. Accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. 3. American Accounting Association. Accounting is the process of identifying, measuring, and communicating economic information to permit informed judgment and decision by users of the information. 3 important points made in the definition of accounting should be noted. 1. Accounting is about quantitative information. 2. The information is likely to be financial in nature. 3. The information should be useful in decision making. Also, accounting has a number of components, namely, identifying as the analytical component, measuring as the technical component, communicating as the formal component. To understand it deeper, let's discuss it one by one. Identifying. This accounting process is the recognition or non-recognition of business activities as accountable events. Note, not all business activities are accountable. An event is accountable or quantifiable when it has an effect on assets, liabilities, and equity. Only economic activities are emphasized and recognized in accounting. Sociological and psychological matters are beyond the province of accounting. What are external and internal transactions? Economic activities of an entity are referred to as transactions, which may be classified as external and internal. External transactions or exchange transactions are those economist events involving only entity and another entity. Internal transactions are economic events involving entity only. Examples: purchase of goods from a supplier, borrowing money from a bank, sale of goods to a customer, payment of salaries to employees, payment of taxes to the government. Examples: production, the process which resources are transformed into products. Casualty, any sudden and unanticipated loss from fire, flood, etc. Act of God. Next is the measuring is the assigning of peso amounts to the accountable economic transactions and events. Financial statements without monetary amounts would be largely unintelligible or incomprehensible. The Philippine peso is the unit of measuring accountable economic transactions. The measurement bases are historical cost and current value. What are historical cost and current value? Historical cost is the original acquisition cost and the most common measure of financial transactions, while current value includes fair value, value in use, fulfillment value, and current cost. Last is communicating. It is the process of preparing and distributing accounting reports to potential users of accounting information. Actually, the communicating process is the reason why accounting has been called the universal language of business. Implicit in the communication process are the recording, classifying, and summarizing aspects of accounting. What is recording? Recording or journalizing is the process of systematically maintaining a record of all economic business transactions after they have been identified and measured. What is classifying? Classifying is the sorting or grouping of similar and interrelated economic transactions into their respective classes. Also, classifying is accomplished by posting to the ledger. The ledger is a group of accounts which are systematically categorized into asset accounts, liability accounts, equity accounts, revenue accounts, and expense accounts. What is summarizing? Summarizing is the preparation of financial statements, which include the statement of financial position, income statement, statement of comprehensive income, statement of changes in equity, and statement of cash flows. Thank you for watching. See you to my next video.
Throw your hands up if you with it, drop it.